Ladies and gentlemen, good day and welcome to Morepen Laboratories Limited Q3 FY22 earnings conference call. Joining us on this call today are Mr. Sushil Suri, Chairman and Managing Director, Mr. Ajay Sharma, Chief Financial Officer, and Mr. Vipul Kumar Srivastava, Company Secretary. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sushil Suri, Chairman and Managing Director of Morepen Laboratories Limited. Thank you, and over to you, sir.
Thank you, Emma. Thanks a lot. Good afternoon, friends. I hope that everybody is safe, sound, comfortable post the third wave. We hope that this third wave is terminating now. So we are happy to see that the number of cases in the country as a whole has come down to less than 100,000. It is around 80,000, which everybody is expecting that India will blast and will have 14-15 lakh cases a day. I think things are in control. They are in a happy situation, and hopefully we'll have good summers and everybody will be more relaxed. Coming specifically to the quarterly results, so we had the board had approved the results yesterday, and we have already shared the numbers with the stock exchange and a copy of the press release and the quarterly results and the presentation. I'm sure all of you have gone through the numbers. So of course we'll come specifically to any question answers, but I'll give you a quick run where we are and how the things have been moving. Before we get on to the numbers, I would like to update you 2-3 main things which have evolved and I would say happened over a period of last 2-3 quarters. So, of course, everybody knows that healthcare and pharmaceutical sector has been very, very, I would say, friendly in terms of market. It has been very friendly in terms of customers. And, of course, because of the COVID, we had to work extra efforts. We had to work, I would say, overnight to serve our customers, to serve the patient, to serve the doctors, which is fine. I think every company has been doing. No credits for that. But interesting part is that on all the fronts, whether it is our API division or it is diagnostic division or it is finished dosage, and to that even the OTC and Dr. Morepen, we have explored opportunities and I would say eventful things happening on all the sides. Now the only thing which company was looking for that yes, we have come out of the old problem, we have come out of the old shackles which we were going through last 20 years. And this is nothing, I would say, hidden. We had a lot of debt back in the days, and company had gone for a very long restructuring process, which went on for almost 12-13 years. So we proudly say that we were debt-free back in 2018, 2019, but one leg of the debt, which was a part of our preference capital, which is technically still a debt according to the accounting standards. So that was still remaining in the books. So yesterday, the board has approved the conversion of that preference capital into the equity share. So the equity will be converted at a SEBI-driven formula, which is approximately 54 rupees, 53 rupees and 78 paisa. So it's a very good, I would say, milestone for the company that the CDR process, which ran almost 15 years, is coming to an end. And the company now would be free from all the old liabilities, and I would say to an extent, I don't mind calling it shackles. So we will be at liberty to go out in the market and attract fresh capital. So last 3 years, the company hasn't had any capital event, and we were just occupied, busy, rather stressed only to clear the old outstanding. So which we had gone through a bad patch back in 2005-06 because of some patent issues in a product. But now 14 crore preference capital is being converted into equity. This will be approximately 2.13 crore shares. So it will be nominally increase in the capital, but our major liability will get out of the books. But more importantly would be that the company would be free to move out. We are absolutely debt-free company now. With the support from all the banks. We are thankful to all the banks for this platform. I would like to say that they have gracefully agreed to convert equity at a market price. That's a good benchmark. And second important thing, which is not there, you can't see in the quarterly results and numbers, is the capex plans. Company had long-standing capex plans, but honestly, we had no capital to spend on its own because we had no term loans, we had no working capital, and all the working capital which the company was enjoying was self-funded. And you can imagine we had limited profits, so how much that self-funding can be. So today we have working capital to the tune of 450 to 500 crores for all the divisions taken together. So, but everything is funded from internal accruals. There are no bank loans, and the only facility we have got from the bank is that we have some FDs, and against FDs we get some LC or some OD limits, which is very temporary. So this is now one event because our balance sheet was struck because of this preferred capital. So it's now, I would say, historical moment for the company. It's a game changer for the company that we can attract capital and we can spend capital and we can have a capex which was badly desired for the company. So since the businesses have been moving all around, we have been growing at 35-40% year on year.
Sorry to interrupt, Mr. Suri. This is the operator. So your voice is slightly sounding muffled to the participants. So could you just switch to handset mode and speak, sir, so all participants will be able to hear you clearly?
Okay, that's fine. Yes, is it clear now?
Yes, sir. Thank you.
Yeah. So basically, I was telling that now we have big opportunity not only for the to attract capital, we have an opportunity to even spend money on the capex, which will take the company to the global scale. What was happening earlier was that it was only the API business where we were exporting, and we are still exporting, and our 60 to 70% of the API business is exports. So, but in other businesses, for example, medical devices or even OTC, we have not been able to put up, I would say, capacities which we need for exports. And even for the finished dosages, we have not invested any money on filing of ANDAs, which are badly required for global market, which is, I would say, the ticket to the global markets, most primarily the US market. So now we are at a situation that to achieve a global scale, the company is ready to invest in the capex, and next 3 to 5 years there will be capital expenses, there will be, I would say, churning around, and it's going to be a, I would say, capex cycle that we keep on investing and of course keep on harvesting. And this is just like this year budget of Indian government, which is capex focused. So I was thinking that our budget is also capex focused for next 3 to 5 years. That's on the lighter side. Now, second, the third important thing which is happening, as you would see when we go around the numbers, is that companies' overall strategy and philosophy to reach more and more consumers directly is increasing day by day. Every day we are adding more customers. Every day we are adding more markets. Every day we are reaching to new patients and new, I would say, touch points. So thanks to our B2B efforts, which were primarily on account of diagnostic devices in the last couple of quarters, and secondly, lately is because of the Dr. Morepen, which already we have a large footprint in the trade, but now in the online segment also, the B2B segment, B2C segment has gone up, and the company is slowly evolving. Earlier, the company had 65 to 70% share in the API market. The API share in the total segment-wise reporting was 65 to 70%. Now it has reached to almost 56, 58%. So more and more B2C customers are being added. B2C sale is being added in the company. I think these are the three major things which we need to take into account. When we go forward, we will explain how the company is undergoing change in the management processes. We are hiring more and more talents to match the technical needs of the company. We are hiring more and more talents to add to the new age technologies. Even the next generation of the family, which is fully engrossed and involved in the business. So they are also educated from best universities in the world, which is Cornell or NYU or Georgia Tech. So we have the best, I would say, internal talent, and also the new generation which is coming up we are basically trying to evolve the management also to a level wherein we can contribute more and more to the business processes. These are the 3-4 things I would like to highlight. So coming back to the numbers, which you have already gone through. So last 9 months of the year was, I would say, phenomenal for the company. So net revenue of the company has gone up by 30%. And just to give you a perspective, last year our total top line was 1180 crores. Now this 9 months we have already done almost 1186 crores. We have almost completed the full year revenue in 9 months. So it's a very good, I would say, clap for the whole team. Everybody has done a good job. And EBITDA of the company has also gone up proportionately around 30%. And of course, the expenses have gone a bit higher, and profit after tax is 27%, because of course from this year onward our provision for taxation has also come up. But if you look at profit before tax, it is almost 60% up. In 9 months, from 70 crores to 112 crores, there is a 60% increase in the profit before tax. But honestly, that 60% doesn't come to your pocket. It some money would go to the tax. So after tax, we are at same 27% increase in the 9 months. So 9 month picture is very good, but of course there are quarterly fluctuations. The Q3 quarter was not very strong on account of some divisions. API division has performed very well, and API division has gone 41% growth in the quarter. The total revenue growth is 29%, but API division has grown, 22% growth in the API in the top line. Diagnostic division, I'm going to quarters. Yeah, API division has grown 41% in the quarter. It has done exceedingly well in the quarter. And there was a huge focus on the exports. Exports have also grown up. Exports have grown up by 43%, which is, I would say, almost matching number. In 9 months' time, the API division has grown 22%, which is very good. And when we say 22%, so this is as against 56% in medical devices, 27% is finished dosages, and Dr. Morepen is again 25%. Now, the division, or I would say the efforts where we have been lacking, is primarily on medical devices business. In the medical devices business, we have grown by 7% in the current quarter, but year as a whole, there is a 56% increase. Last year as a whole, in the full year, we had 287 crores of top line, but this year, in the 9 months alone, we have scored 351 crores. It's like 56% increase, which is humongous. But during that quarter, there were shortages of the chips, as you all know. So there was a huge shortage of chips even in the, I would say, Q2. So there was a lot of supplies of glucometers which we couldn't fulfill in Q2. So we had to continue supplying in Q3. So some of the, I would say, mass has shifted from Q2 to Q3. So Q3 number looked depressed. But just to pull you up, that our business model is that we keep investing in the meters, and as a company in last 4 years, including the 9 months for the current year, the company has invested around 132 crores in installing new meters. So the new meters company has to basically invest from your own pocket. So we subsidize the meters so that more and more strips are sold. So that is, we keep seeding the future. So the more meters we invest, the more sales we get in the coming years. So this is one reason that our profit margins seemingly looks little depressed, because we keep investing in the meters, particularly in this quarter, in Q3 quarter. So investment on meters was much higher. So our investment on meters was 19% as compared to 7% in the last quarter. But it was 27% as compared to Q2, which was only 10%. So there's a higher investment in the Q3, because in the Q2 there was a COVID scare, and lots of people were buying strips. So there were lesser of new installation meters. The strip sale was higher than the meter sale. So we could see that we couldn't invest in the meters much, and of course there was a shortage of meters. But if we see year as a whole, our numbers are pretty good. We are absolutely comfortable. our investment in the meters is same. And the second thing, with little more investment in the meter has been added is that now since our reach is increasing, the company has got size. Your company is going to be more than 500 crores the next year only in this business. So we are increasing the reach. So as I told that every day we are adding more customers and more distributors. So the company has started placing some advertisement above the line and the popular TV channels. Then, of course, we can't afford the prime media still, but in secondary channels, news channels, we have started advertising. And you might have observed some ads here and there. And Mr. Boomer Irani was appearing, and Guldar Saab was also there, and advertisements of BP and glucometers. So we are now launching in this quarter or early next quarter, so fertility range where Kareena Kapoor would be there. So the company is investing behind the marketing. So the marketing spend in the quarter is little higher than usual, but it is more for attracting more and more customers. So the results may not be immediate, but as a company, we know that we are going to the next level and we are creating new markets and new customers, which is the future. We are seeding the future, we are investing in the future. The second thing in the medical devices business is that glucometers have been growing exponentially every time. This quarter, we have set up a record even for the BP monitors. So BP monitors, we have exceeded our competition, Omron, and we have sold 1 million meters in 9 months' time, which is a record for us. This is the highest meter sold ever in any year. So within 9 months, we have sold 1 million meters. So as compared to the competition, of course, there was a shortage of chips all over the world. So they had shortages and we could get some chance and we have a better place here. So similarly, in the glucometers also, we have been creating our own new records. We have in the market now almost 6.75 million meters. We plan to install 15 million meters in the next 3 years. So it's a long way to go. So we will keep investing in the meters, keep creating the future, and as we go forward, more and more people will buy strips. That's on the devices side. And I shared with you on the export side that going forward, when we have more, I would say, in the coming extension plans of the devices, which is already being planned to be hived off into a separate subsidiary. So the board has approved even the business transfer agreement of this division. And when we have the business sitting in the new company, so we will be spending more on the capacity creation, and we want to make medical devices to be a global play instead of just an India play. Whatever we are doing in India, we are competent and confident that we can do in our similar size markets, whether it is our neighboring countries, whether it is Sri Lanka or Bangladesh, or I would say Cambodia or Vietnam or Philippines, wherever we get large population of India size, India type of middle tier economy, so we can have a similar strategies. And of course, once we get a CE certification and US FDA, we can export these things also. So in both the places, whether it is API or medical devices, so the bigger play would be that we focus on the global markets. In the API, we had shared last time that we have a project which is already approved, and we were waiting for the capital approval only. So that last leg I shared that the preference capital has been cleared by the board now, and of course it will be subject to the shareholders and regulatory approval. So once all the formalities are finished, so we will be ready to implement our capex plan for the API also. Wherein we have 15 molecules going off patent in the next 5 to 7 years, and we have to build in capacity. So presently, the only thing we are lacking is the capacity. We have got the US FDA approval of hexaconidine. We shared last time through a press release. Then we got our new product launched, dapagliflozin, which is anti-diabetic. Then we have new product, sitagliptin, losing patent in July. So we are working for that. So the only thing which is stopping us is capital investments. So soon we'll be adding capacity, and whatever investments we are making in R&D this quarter, this investment in R&D was also a little higher. but everything will be put to use. Coming back to the finished dosages, I shared with you that it's gone up. This is where I would like to highlight that this business has lost heavily due to the COVID situation last year, a lot of lockdowns, but this year it has recovered and now it has grown 23%. So actually I would say it is not a growth, so it is more of a recovery. But we can see that the market is coming back and Morepen is getting its due credit from the market. Doctors are very happy. Here again, we would like to see the company to go to the next level. We want to find our own ANDAs. So we are working on a plan which we will come out maybe in the next 6 months' time, that how do we take this business to a global level. Since we have the scale now, we have the capital window available, and certainly the market is there. Dr. Morepen, as I shared, that it had been doing exceedingly well. In the Q3, it has grown 46%. Of course, last year it was depressed, so I won't say 46% is very high, but it has recovered from where it lost last year, and it has also increased from the low base. So in 9 months' time, Dr. Morepen has grown by 25%. I'm happy to share that the trade business has its regular growth, where we have Vernon, Nemalate, and other brands. So where we have Feverax, Painax. So there is 25% growth, but the major growth is coming from online, which is 449% over a period of 9 months. So the numbers look very large because the absolute numbers are small, but if we look quarterly growth, so in Q1 we grew by 200%, in Q2 we grew 36%, then 40%. Quarter on quarter, 30-40% growth. This is very typical in an online trade. So we have launched more than 50 products online, and which are getting good traction. Of course, we have to invest heavily in the marketing, but we are getting a good, I would say, recognition from the customers. There are repeat customers. So they're on the website, it's available on Amazon, it's available on Flipkart, it's available on other health platforms, whether it is HealthCart or Concall or the similar platforms. So online launches have been very successful. So we have the multivitamins, collagens, muscle foods, sexual wellness products, iron, zinc, probiotics. These are all new age things which the new generation is looking for. And the online shopping has become, I would say, this is the future where our OTC brand will go. And similarly, in diagnostic devices, we are focusing more and more on the consumer devices, and we'll come up with more and more projects on the consumer side than what we are doing on the hospital side. We are more of a consumer company in that sense. So Dr. Morepen is a brand which is used both for medical devices and for OTC. So in 9 months' time, we have a top line of 551 crores. So if we just annualize it, maybe it is around say 700 crores as we are sitting today. So you can see the value of the brand typically in a formally in a this branded market. So usually it is top line multiple. So I don't want to give you a number, but a 700 crore brand, what would be the value? R&D spends in the quarter have also gone up by 58%. I think during 9 months, it's 6.5 crores to 10.3 crores. So primarily in API and finished dosages, primarily because of the ANDAs. Devices, there was not much spend because the major expansion is expected when we do the major capex and R&D labs. That's broadly the summary of the results. So, but I can quickly run the numbers again. The net revenue was up 30%, EBITDA 30%. Interest is very nominal, so no discussion. Cash profit is up 42%, 133 crore cash profit. In the quarter, if we look at it, the net revenue is up 29%, expenses are 31%. So technically, expenses should have gone down, but maybe 2-3% expenses have gone up because we had higher marketing, higher R&D spend, and some little higher investments in the meters. But EBITDA is down because of these 2-3% thing. And EBITDA is of course still up, but percentage-wise it is 7% up only. Interest is very nominal, just only 0.75 lakh rupees, 0.75 lakh rupees interest only. So cash profit is up 9%. So we have been discussing internally that if the revenue goes up, the cash margin should have also gone up. But we are seeing it from a longer term perspective that if we keep investing back in the market by either way of advertisement or marketing or by way of R&D. So these are the long term things. But of course, COVID had virtual, I would say, so many ups and downs in all companies' figures. So I would say that we will still see, if we look at 9 months data, we are comfortable. 30% increase in EBITDA and cost profit, which is good. Coming to the profitability, so profit before tax is up 59% in the 9 months. In the quarter, it is up 14% because the tax has come down. And post-tax, the profit has gone down because for the first time, we are proud to say that the company is being subjected to the tax. So we have a provision for tax to the extent of 5.62 crores. So after tax, it looks down, but company's performance is very good. Numbers are very good. That's all I would like to say. That as a recap, we are all set for the phase 2, or I would say Morepen 2.0, because as we stand today, we are sort of liberated and we have cleared all the deck for all the past liabilities. We may still have some sluggish litigation standing in our books, but financially we are now free. We can approach the capital market and, of course, go for major expansions what we have on the cards. Thank you very much for the patient hearing. So I can open the floor for the question answers.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may enter star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Saurabh Bothra from Spring the Ride. Please go ahead.
Hello. Hello.
Yes, please. Yes.
Sir, I just wanted to ask first 2 questions.
Mr. Bothra, you're not clearly audible. If you're on a speaker mode or hands-free mode, please switch it to handset and speak.
Is it audible right now?
Yeah, it's better.
Yes. I just wanted to ask, sorry sir, congratulations for that clear and all the things. And number 1, I just wanted to come out on the EBITDA margin. Your margin is very much low. Can you explain what is the reason for that? And number 2, what is the COVID-related sale in this quarter? Hello? Hello?
Yes, Mr. Bothra, we can hear you. May we request the management?
Should we go with all the questions first, or we go one by one?
No, go by step, sir. Please explain me the first 2 questions, sir.
That's it. As far as the EBITDA margins, as far as I'm concerned, I would request if Ajay, our CFO, is in the call. Ajay, you can take the back. If you can explain EBITDA margin, maybe the margin on API and medicine.
Yeah, good evening. This is Ajay. The primary reason, as CMD has explained, primary reason for fall in EBITDA margin is that we are investing heavily in that devices business. The primary reason is that this quarter we have done almost 2 times the investment which we have done in the previous quarter. If we compare with the last year, same quarter, so it is again, say, 1.5 times. The primary reason is that we are investing to expand our top line in the devices business, where we feel that there is much is on the horizon. It is only that short term there would be a minor variation in the profitability, but in the long term it will help the company to capture the market and maintain its hold on the profitability as well. So I think on quarter, we shouldn't get disturbed that this quarter EBITDA margin is slightly more or less. The horizon is for many more years. So though we are investing for last many years on the devices business, but as we are expanding, we are getting more and more traction in the market. So our philosophy is to really expand our top line in the devices business, which will give you can say a permanent hold over the market, and we will be able to hold margin over a period of time. So this is one of the things. Second, as we explained, that we are also investing on the marketing as well. Previously, we are not putting any advertisement in the television. So now we are engaging Bowman Irani and a few more television personality and TV artists for marketing activities. So this is going to really our devices business reach the every household, wherein our devices has already been established, and it will give more hold in the domestic market, and will be able to really expand our base in the devices business as well as in the consumer segment, because our Dr. Morepen business, the OTC business, is also consumer centric. So it will give hold on both the consumer centric business devices as well as the Dr. Morepen OTC business. So that is one of the things. Secondly, we are also investing on the R&D spend as well. Though we have been spending, but we are increasing the spend. As we are getting the increase in top line, so quantum of profit is getting higher, maybe percentage is low, but it is giving us more leeway to invest in the R&D segment as well. So process and quality improvement and new polymorph working. So all these things are basically is a step towards the future expansion of the market, particularly when a lot of molecules getting off patent. So I think we for next 4 or 5 years, we are basically keeping ourselves ready. So there could be minor variation on quarter-on-quarter basis, but we shouldn't be really worried about that.
Okay, understood.
Good. I would like to add, Saurabh, that even though EBITDA margins Ajay explained on the RP and this, but major, for example, on the API front, EBITDA margins are pretty good, pretty stable, and these are as good as for the last few quarters, and these are in the range of 17 to 18%. Medical devices also, 9 months as a whole, it is very good. This quarter looks little depressed because of some of these having shifted from one quarter to another, or maybe some marketing expenses are here or there. But in general, we are good on the EBITDA here also. And finished dosages, we are still investing. And Dr. Morepen is also positive in all the 3 quarters. So there's nothing to worry. We are on the whole pretty good. But yes, as the size of the company would grow and expenses will remain the same, and we will be able to churn out better EBITDA. So help us grow. So moment we bring in more capital and we are able to increase the top line, the fixed expenses will remain same, and everything will add to the bottom.
Okay.
So your next was in the COVID products. We do not have much focus in the COVID products, except that in the first quarter we had around 19.5 crore sales of these pulse oximeters and oxygen concentrators, which in Q2 has reduced to 4 crores, from 19 crore to 4 crores, and in Q3 it was only 75 lakhs. So we don't have any dependence on the COVID. But in January, because of this, some news about this third wave, of course it was only for 2 weeks, so we have been able to sell some oximeters, which we were having old inventory, so it's liquidation of inventory at cost price only, maybe sometimes less than cost price. So that has happened in January, which we will be able to share with you in Q4 results.
Okay, understood, sir. Sir, another 2 question is on the side. Hello.
Yes, sir. Yes, go ahead.
Sir, if I can know, can you maintain the sale at this run rate, number 1? And number 2, how you will do the fundraising now after this preferential is over? So can you explain me this?
Yes, sir. Particularly talking about the maintenance of sale, do we have this run rate? I would say that if you look at the CAGR, we are very open and transparent. In all the presentations, we share that what is our CAGR, what is the CAGR, so the compounded average growth rate. Our CAGR in the revenue has been 25%. It's not that we have, for the first time, got higher sales. Year after year, we have been growing at CAGR of 25%. This year, we are already at 30%. So if we see, I would say 25 to 30% rate, I don't see that it is a big challenge, company as a whole. But yes, in a particular segment, for example, if you look at medical devices, it has been growing 46%. So API is 26% and medical devices have been growing at, I'm just pulling the numbers, medical devices CAGR was 41%. That I would say may not be repeated. 41% is okay at small numbers, but 25-30% CAGR, we are comfortable to that in every business. Maybe we may grow by 25%, 30% in 1 year, but as a compounded annual, it may be 20%, 22%. So we are comfortable. Because when we go from here, we are opening new markets. So what happens, Saurabh, is that it is not very easy to grow from where we are. We can't sell more to the same customer. We can't sell the same product more. We have a huge pipeline of API which is opening up. We just have to put up capacity. So we would rather say our sale will multiply, it will be exponential. Similarly for the medical devices. So we are adding more capacities, we are adding more markets, and we can see the numbers growing. It all depends how fast we do and how fast we all work together to capture the market. But the opportunity is there. Second question is on how do we raise the capital? I would say we are open for that. We haven't started any formal process. We are just having informal discussion internal and with our associates and advisors. So we will start a formal process, and whenever we have finalized the plan, certainly we will come back to you and share the plans. It's okay.
Okay, sir. Understood, sir. Last 4 questions from my side, sir.
Yes.
Can you explain me, sir? You in the last quarter you were looking for the process for the demerger of a medical devices and API business. So, are you looking for that opportunity? Number 1 question. And number 2 question, sir. How much molecules are you expecting, sir, in the coming 5 years horizon, sir? Can you exactly quantify this in this molecule businesses? And number 3, what are the how much you are capturing the market share in the API formulation, sir?
API formulation. API or formulation?
API, sorry. Not API. Exactly API.
Lovely. Good. So as far as the demerger of the medical devices business was concerned, so we had taken a shareholders approval in last September, October, and the process has already begun, and I told in my commentary earlier. So we have already started the process of slum sale into a separate subsidiary. This will be 100% owned by the company. That process is already on. It will facilitate the company to attract better capital and better type of customers and better type of talent. Then the second point is how many molecules are coming off patent. There are 15 molecules which are going off patent in next 7-8 years up to 2030. For which we already have developed the process. We are in the process of filing drug master files, and we are making validation batches. And of course, we have pilot level facilities also. Some products are losing patent in this year, some are lost last year. As I shared earlier, dapagliflozin expired last year. Sitagliptin is expiring this year, and linagliptin in 2025, apixaban in 2025. So we will have, I would say, 15 products which are expiring. The total market size in the API would be anywhere between $7 to $8 billion. So even if we take, I would say, 10% market share, we are happy. And second is how much share are we capturing now? I would say that's a very specific question, as if it is addressed only for Morepen. We believe in capturing the market. Loratadine, we are the market leaders. We have the 90% share of the global generic market. Out of the India, we have got 64% share of exports market. 64% of any goods which ship out of India is Morepen. I would say every 64 out of 100 kg Loratadine which goes out of India is Morepen. Within Morepen, 82% of our business is Loratadine, export for Loratadine. For Montelukast, we have 36% market share, which is the largest market share in export again. For rosuvastatin, we have around 18 to 20% market share. So molecule to molecule, it depends. So our strategy is to do the leadership. We don't want to be just another player. Our strategy is to be cost leader, go from the basics, and we try to control and lead the market. Does it answer your question, sir?
Okay, sir. Understood, sir. Thank you from my side, and we'll be joining in the next quarter, sir. Thank you.
Thank you, sir.
Thank you. Our next question is from the line of Akash Das, an individual investor. Please go ahead.
Sir, my name is Akash. I have a query. Sir, in the auditor statement, it is written that for Dr. Morepen Devices Limited and for Morepen INC, the auditor has mentioned that we have not reviewed the financial results of these two subsidiaries, and financial results of these two subsidiaries are based on management certified financial information. So can you just clarify what is the reason for not reviewing these two companies?
Ajay, can you please help?
Yeah. In fact, Morepen Incorporation is our US-based subsidiary. So it has, we get yearly audit for this. And Morepen Devices Limited, so there is no business in this company. So it's only a small capital. So as there is no business, so there is no any review or audit has been done because of no operation devices and very small insignificant amount of revenue, maybe a few lakhs in the Morepen Inc. So we get this number on a yearly audit basis.
I would like to add, Akash, this Morepen Devices Limited is going to be a new darling of the market. This is a new company which has been formed, wherein the medical devices business will be shifted. Now, since the company has to be incorporated first to get into the agreements, so this is just a blank company. So we will transfer the business. Maybe next 2-3 quarters, we'll see that company.
That would be normal. Yes.
That will be showing the audit.
Yeah. I get it. Yeah.
Akash, thank you.
Okay. Yeah.
Thank you. Our next question is from the line of Abhishek Bera, an individual investor. Please go ahead.
Hi, Mr. Suri. Good evening. Congratulations to all of you for working hard and getting where we are, right? So last couple of years has been phenomenal for Morepen Lab and its investors. So I have 3 questions. Like, what is the status of CE certification on the device business? Then next question is, given that you got FDA of Allegra, so do you think that it is going to add more growth to the API business from Q4 onwards? Third question is that device business impacted due to unavailability of chips and all those things. So given that Q4 would be normal, like should we expect a decent growth on the device business in Q4 onwards?
Good, Abhishek. I think you have got very intelligent questions. So, first of all, the CE certification. CE certification is a very, I would say, routine process for us because we are already FDA certified company. But unfortunately, last 2 years, because of the COVID, there have not been many physical inspections. And it is very difficult to get appointments of the inspectors because many few people are traveling and because of travel restrictions. So we have not been able to get audit date for CE certification. But otherwise, our facilities are up to the mark of CE, and these are already been approved by BSI, which is British Standards International, for ISO 13485. So these were approved just 1 month before the COVID started. In February, we had the inspection, and in the March, this COVID started. So our systems and processes are all according to the ISO 13485, and it is approvable for CE. But getting a physical certificate, it may take 6 months to 9 months, depending on the travel of the officers. But we have all the systems in place, nothing to worry. But honestly, as in today, we don't have capacity. Our limitation is that we can't produce enough even to sell in the domestic market. So like I said, that some of the supplies of Q2 were shifted to Q3, and there was a huge shortage of the meters. And BP monitors, we were lucky that we had some supplies. So we are Naturally, not we don't want to be dependent on Korea and China again. So we are trying to expand our own capacity. Then coming to the US FDA of Allegra. So Allegra, this hexaconazole we were already producing since last many years, but we had no tie-up with any large customer. We were selling in the semi-regulated market. So now, since we have got a US FDA approval, and of course, this has been figured by one of our oldest customers since last 20 years, who has been manufacturing from us. So now, depending upon their market forecast and depending on their orders, we are comfortable and confident that may not be Q4, but Q1 onward next year. So we will start getting additional sales of hexaconazole. Again, capacity is constrained, but we will manage it. So much capacity we can manage. Then on the devices side, like you said, that how much would be the sales and revenue. So I would say, depending on the market, how do we react? But normally this quarter is not very aggressive. Usually March quarter, or particularly the month of March, people are a bit silent. The trade doesn't take much stock. But it all depends upon the overall, I would say, pickup of the market. So I'm able to give it numbers specifically. But this much I know that usually we will be able to maintain what we are doing.
Thank you, Mr. Suri. That answers my questions.
Thanks a lot, Abhishek.
Thank you. A reminder to our participants, if you wish to ask a question, you may enter star and 1. Our next question is from the line of Jay, an individual investor. Please go ahead.
Hello, Mr. Suri.
Yes, please. Yes.
We are investing heavily in medical devices, and you have seen like so many things, new things are coming up. Recently, I have gone through an article saying that one person from IIT guy is being funded 500 crores by angel investor from US. So he has devised a new thing where he can, just by putting finger on that small device, he can see the readings of glucometer, then your even blood pressure, then ECG, and another 2-3 things is showing 6 things. So they are starting the production from March. Don't you think that something like this comes up aggressively? This medical devices, like, and they don't have to put the visuals, like, and scripts are also not required in that. So from March they are marketing. Already they have taken the orders from February onwards. They are taking the orders, and this guy got funded 500 crore rupees for this. So this type of something comes up. Don't you think everything affects your devices business?
Yes, Mr. Jay, I would say that you have got the recent and most up-to-date knowledge in the market. It is highly appreciated. But I would say that as a company, we keep an eye on all the recent developments, what is happening on the R&D and what is happening in the market. And I don't say that we are the best and we have everything. But what we understand, and the way I would like to say, is that our team somehow is very conscious of the Indian domain and Indian market. So we understand that these kind of devices are coming in the market, which are like, say, the needle-free or prick-free. But I do not know what would be the price of that device. The only thing I know that this kind of devices are priced anywhere between 12,000 to 15,000 rupees. For 15,000 rupees, 15,000 rupees, we can buy a refrigerator, we can buy a microwave, honestly.
No, that is true, but immediately, initially, it is, because he's taking only 1,200 order, the moment something clicks, over a period of time, it can come down to 5,000, and then at that time, he need not spend on strips and all. So, and he's getting everything like blood pressure, ECG, everything on one small device, which is to be attached to, I believe, cell phone.
Yeah, that's something. I understand that. So basically, what our experience had been, and certainly experiences are always evolving, and we are aware of that. So our study is that our India, our country, with a much bigger demographics, we still need a price point anywhere between 500 to 1,000 rupees. We are not able to sell glucometers when we are selling it for 2,000 meters. And we have to bring down prices every time to penetrate the market. Now, for example, glucometer strips. We sell 10 crore strips every year. It's a huge number. I mean, we have to be respectful to the point that, okay, it has to be affordable. So similarly, simple machine BP monitor. It's very simple device, but that BP monitor was for 5,000 rupees. We were selling only 10,000 pieces. Like I shared now, we have sold 1 million pieces. But if you want to sell 1 million pieces, then you have to reach to the hearts of people. Then we have to be price sensitive and we have to reach to the point. But we are not saying that these devices will not work. These also will be there. That's the first point. Second point is the accuracy and doctor's confirmation. In India, we have a very typical problem that our medical practitioners are not friendly with these devices because it is kicking below their belt. So it hits their own business. So they never recommend these so-called interesting, complicated ideas. अगर आप उससे सारा कुछ घर पे कर लोगे तो डॉक्टरों के पास कौन जाएगा? So that had been an attitude, but I think thanks to COVID, so now doctors are also saying, okay, you do your testing at home, you check things at home, don't come every time to the doctor. I am a big fan of Apple Watch. I'm wearing Apple Watch since last 6 years. So last 2 years, Apple Watch has got ECG. Honestly, when I tried it first time, just for sake of trial, I tried that ECG. After that, I have never used. So Apple Watch also gives SpO2. But that's just a gimmick. I mean, everybody is using Apple Watch. SpO2 can be measured in Apple Watch. But we still buy oximeter because it's a question of specialization. So I would say these things will coexist. But as a company, we are aware. We are also working on many things. So someday we will give you some good news that we are working upon. But yes, thank you for giving the suggestion. But certainly we will evaluate that also.
Okay. Thanks. The second question I want to ask is the 178 crore expansion in 9 months that you announced, that already that production has started from that unit or still is going to take time?
Now, there we were waiting for the single window clearance. We got that last year. Now, this year we have got the environment clearance also. And we have already started working on building plan. So this is where the capex is required. Earlier we had some arrangement working with another European space investors, Corinth. So we had planned that, okay, maybe the money which will come from Corinth will be used for that. But there was a delay in our project also, and the Corinth investment also couldn't fructify. So that project is yet to take off. And now what we are doing is, rather this investment we are dividing it in 2 parts. Some part in phase 1 we will be doing within the same complex, within the same building blocks, so that we don't invest more in the civil work. But in phase 2 we will add, so we are revisiting the total project size into phase 1 and phase 2, so which we will come back with more detail.
So phase 1, when we can expect the production from phase 1 only?
Phase 1 will be, I would say, 12 to 18 months from the day we raise capital. But the raising of capital hasn't been fructified yet. But in routine, we are adding the capex in a manner that we can carry on with our sales regularly. For example, last year we closed around 680 crore. This year will be around 800 plus. But as whatever 200-300 crore extra capacities are required, that we are building parallelly. But we want to go from present capacity of 300 KL to 1,000 KL in 3 years' time, for which we need some additional capex.
Okay, sir. Thanks, sir.
Thank you, Mr. Chair.
Thank you. Our next question is from the line of Narendra, an individual investor. Please go ahead.
Hi. Is the last question, Anna? Yes, go ahead, Narendra. Yes, Narendra, go ahead.
Yeah, I have mainly the question is related to consolidated bottom line and standalone bottom line. So there is no much difference between standalone and consolidated one, except 21.51 and 21.52 crores. Okay, is it what are they contributing in the consolidated one? So OTC segment, and also do we have any other subsidiary which is contributing there, or can we assume that this OTC alone is contributing about 1 lakh for the consolidated statement?
Yes, it is only OTC business. Yes.
Right. So, which means for OTC business margin is very low when we did 26 crores of bottom line. So the top line and the bottom line was just 0.1 crore.
Yes, that's true.
Can we assume that, or is there anything to justify that?
In fact, again here we are on OTC business as well. So we are investing in the marketing activities. So at this point in time, we do not have bottom line, but it is giving us traction in the market, and it is increasing our top line. So as we improve our top line, so bottom line will definitely improve. So basically, this is a period of investment. You will definitely see its final results in times to come. So nothing to worry on that account.
Okay. So currently, as expected, the top line was, bottom line was low, right?
Another I would like to add here that in Dr. Morepen OTC, there are two separate lines of activities. One is a trade business, which is stabilized and profit making. We have very premium brands like Banal and Lamonate, which are highly profitable. So therein we are adding more products to feed the trade because we have got beautiful distribution and we have already a coverage. That is one aspect. So whatever profits we are earning in top products, we are investing behind other products so that we can capture more and more market, like PMAX, like Fever-X, that is one. Second major investment where Ajay is saying, that is happening on the online part. As I shared in my earlier commentary, that online market has increased 449%. Quarter on quarter, we are doing 30-40%. So that is where our major investments are going. That in online, there is something called cost of acquisition. So all that advertisement and marketing and whatever is done to acquire a new customer, to give them discounts, to offer them schemes, and to give them free delivery. So that is the initial investment. But once you get the hook on the customer, so that customer is your customer for life. So this is it which the company has taken, and we are one of these most, I would say, forward-looking companies, wherein we believe that the trade is going to be there where it is. The future is going to be from the online. So in naturally finished dosages, we cannot do much on the online, but both in medical devices and in OTC, we are doing online. We are going B2C, and the younger generation teams what we have, the new talent what we are hiring, and the family manpower which I shared that from the best universities in the world. So everybody is understanding this business much better than the traditional business. So we are investing behind that.
Okay. And follow-up question on the capex. How much we spent towards capex in last 9 months?
Ajay, you would have the numbers?
In API capex, we have spent around 12 crore rupees, and around another 5 crore is work in progress. So in all, this year would be spending around 22 crore odd.
Is it API only or including devices?
Primarily in devices. If we see the investment, we have done around 45 crore investment in the device itself. So yes, that is it. And last year we have done in 12 months. This year we have done in 9 months.
Okay.
So that is how our top line.
Okay, sir. So if there is any cash flow statement along with the balance sheet, that would that would give them more clarity on how the cash being spent. So that is where I have this question.
That 6 months we give, but annually definitely will give. Yeah.
Sure. Yeah, sure. Yeah, thank you for that. And do we have any ANDAs applied in this quarter and expecting approvals in or any pipeline to be launched in next financial year?
We haven't got any approval. We haven't even done any filing, but we are still setting up the plant for ANDA. So we have got the dossiers ready, but we haven't done the own validation, and so filing is still 2 years away.
Okay. So which means the Morepen Inc. So we can see some results only after a couple of years then.
That's right. We have big plans for that, but like I started my commentary with that we were stuck because of our capital limitations. So we wanted to resolve that first. So now we have settled the pref cap and most likely will clear all our balance sheet and all charges from the balance sheet. So maybe we have better access to capital now with all of your support.
Thank you for all the answers, Mr. Suri. And
so nice to hear you. Thanks a lot.
Only my concern is only the capex plan, that how we are going to achieve these for all the different segments. So
Yes.
This is only my concern.
It's a concern, it's an opportunity, we will do that. Don't worry. We are on to it. But we'll come back.
Okay. Yeah. Thank you, Mr. Sir.
You understand, as a listed company, we can't speak much, so we have our hands are tied. So.
Okay, got it.
Can I give any that? Yeah.
Thank you.
Thank you. Our next question is from the line of Ritesh Vinci, an individual investor. Please go ahead.
Hello.
But anyways, let's go.
Can you hear me?
Yes.
Yeah. So recently, on your interview, I saw that you mentioned that some, the approval has come for Sputnik or the Sputnik related. Can you throw some light in terms of what would be the opportunity and from which financial year the revenue that will come in the financials, and the quantum of revenue also, if you can give some high level colors or thoughts on that.
Ritesh, I would say that Sputnik is a huge opportunity because it is related to COVID. But we all know how much can we comment on COVID. Nobody knows how long, how big would the COVID be. But it's a general consensus among the pharma companies and vaccine manufacturers worldwide that COVID is here to stay in one form or the other. And so would be the vaccines in one form or the other. So basically, I would say that we have got a plant ready for the vaccine, and we have got approval from the state for the manufacture of the Sputnik vaccine. Now, maybe instead of Sputnik component 1, component 2, now we hear that they got approval, RDF has got approval for Sputnik Light. So there is a good chance that also get approval for Sputnik Light by amending the same drug license. And once we get the approval for the Sputnik Light, we will sign an agreement with the RDF through Serum. Now we hear from RDF that Serum will be supplying the bulk. So we will be producing the Sputnik vaccine, and we have a capacity up to 5 million vials per month, which is like 25 million doses per month. And now how much we will produce, it all depends how much bulk do we get from RDF or / Serum. So we cannot command how much capacity and quantity would be used, but we have capacity, that what we can tell. But it all depends on the requirement, because as in today, Russia is having more than 150,000 cases every day, and they need vaccines even for Russia, and they need for other third world countries. WHO has placed orders with them. WHO hasn't approved Sputnik as yet, but they say the moment it is approved, you will get so-and-so order. So I would say these are moving parts. So we're just keeping our fingers crossed how much does it get, but I would just say it's a big opportunity. So let's not get overwhelmed excited about it, but we are sitting in a gold mine. Let's see. We will continue giving any estimates.
Okay. And one more question, capital, fresh capital. Can it be, or is it also a plan that some third-party investor will be inducted in your, particularly the medical device business, or what? Is there any plan on that?
I would say we are open. We haven't haven't started exploring on one-on-one basis, because if there's anything would come, the public announcement. But we are open to bring a private equity player in the medical devices company, or maybe in the parent company. So depending upon how it comes, because earlier we were not able to approach the market. Now it's a historical moment for the company, that it's a game changer, that we are at a situation that we can invite people on board, and we are ready to partner with people. So we can go for M&A. We are open.
Okay. Thank you.
Thank you.
Thank you.
Ladies and gentlemen, that was the last question. I now hand the floor back to Ms. Suri for closing comments. Over to you, sir.
Thank you. I would like to thank all the participants for a wonderful and interactive session. I know that numbers are numbers and everybody has gone through and everybody understands well. But it's always rejuvenating to talk to you guys and get fresh ideas about market and what's happening around it. It's always, we are happy to share thoughts. So thank you very much for having an open session, and I love these interactive discussions with open heart. So be available anytime. If there is any other question or query, you can write to the company secretary. And I would request again, COVID is here to stay. Please take precautions. Don't be adventurous.
Thank you very much.
Thank you.
Thank you so much.
Thank you. On behalf of Morepen Laboratories Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.